So what if I told you that 90% of traders actually trade backwards? Think about it. If you're reading a book and you randomly open it up to page 143 and you just start reading the book from there, of course it's going to make no sense to you. And similarly with the market, I like to think of it as if each time frame is a different chapter. So the daily time frame, the 4-hour time frame, the 1 hour, the M15, the M5, the M1. And with all of that information, we can take a simplified, precise approach on what trade to take next. So in this video, I'm going to be breaking down how to effectively do a top-down analysis, and I'm going to be sharing with you now a systematic approach that utilizes every time frame and each detail of every time frame and how to connect it together to give you this framework that will change your trading forever. So before we get into the charts and practical application, let me first lay out a blueprint of what we're trying to achieve when it comes to a top-down analysis. Because a lot of people will spend hours on the higher time frames thinking that the higher time frame is safer, thinking that the higher time frame gives more value, gives more information. And to some extent, maybe that is true because the higher time frame holds more information. It holds more money, it's more significant, but that doesn't necessarily dictate that it's more meaningful or more important, because I could argue that a supply zone on the daily time frame that is 100 pips away, what importance does that have on today's price action if we are in no man's land? Maybe the 5-minute time frame is more relevant for today until we arrive to that supply zone. So context matters, and we need to understand on each day what each time frame is serving us, and as each day progresses, different time frames will have different importance to us based on where price is and what it's interacting with. But the foundation of all of this is understanding the main push. When you go through your sequence of time frames, and what I'd recommend is utilizing packaged time frames. The packaged time frames mean I use the weekly and monthly time frame as a package. They are both going to tell us the same information, and spending time on both of them is just a waste of time because you're going to get the same conclusion as they are going to give very similar information. The next one is the daily time frame. The daily time frame gives us a refined view of the weekly and monthly, gives us more refined main pushes, more relevant trends, and that's a great starting point. I personally spend about 1 or 2 minutes on the daily time frame because no longer is actually needed. And what I'm going to teach you is exactly what you need to take from the daily time frame, how to find relevance in it, how to refine it, so you're not randomly marking up all the daily points of interest, all the daily trends, and then coming to realize that none of that was important for your day's trading. The next package time frame, and my preferred higher time frame, is going to be your 1 hour and 4 hour. I'm going to package those together because again, they're going to tell us the same information. It's just obviously the 4 hour and 1 hour. The 1 hour is going to be slightly more refined, and I use those as another package time frame. This one is where I'm going to find my higher time frame zones, my higher time frame trend, my higher time frame directional bias, and slowly interacting that with the daily time frame. And then the next package time frame is what I like to call home, the intraday time frame, and that is going to be your package of M15 and M30. These two time frames are going to give you intraday points of interest, intraday liquidity, intraday trends, intraday targets, intraday invalidations. This is where you need to spend a lot of time on to really know what is the directional bias, what are high probable versus low probable roadmaps. If you check out all the videos we've done on the channel, this is exactly what we speak about: supply and demand, market structure, liquidity, probability zones, roadmaps. All of this begins with deeply and intimately understanding the M15 and M30 package of the intraday time frame. And then lastly, your last package is going to be M1 and M5, your lower time frame. And the lower time frame is going to be the most important in my opinion. Controversial to some, confusing to others. It might go against your current beliefs, but let me ask you, if you had the option to watch a movie, would you watch that movie really zoomed out, and would you watch it in 360p quality, or would you zoom in and look at it in 4K Ultra HD? If you had the option to look at price in that detail, why would you not? If you find yourself jumping into trades randomly, if you find yourself a little bit confused, if you find things are moving too fast, that is not a problem of price action. That is a problem of understanding and skill. And the best part about that is in your control, because if you know how to control your psychology on the lower time frame, if you know exactly what to look for, if you know exactly what is an execution criteria, then you're not going to randomly jump in. You're not going to be randomly confused. In fact, you'll be totally empowered and enlightened because you'll see all the details that the higher time frames don't give you. And lastly, connecting all the dots together. The packaged time frames from the daily to the 4 hour to the M15 to the M1, how we string them all together to generate high quality trade ideas and not just spraying and praying and hoping for the best. Let's start off with the daily time frame. When you come to this chart, you might get a lot of ideas. You might start drawing a lot of things. You might analyze each little corner of price to get everything out of it. What are you really looking for? What are you trying to achieve? And most importantly, the question you need to ask yourself, how will it affect my decisions for for today. The day you're trading, you need to find relevant information because look, price is all the way down here on this day. So why does it matter what's all the way up here? Why does it matter what happened all the way down here in 2022? We have to think, what impact does it have on today's price, on today's decisions, specifically because we are here in price. So with that goal in mind of what is going to be relevant for today's decision making, today's analysis, we have to draw out specific key information from price. So the key things that I look for on a higher time frame is overall trend, liquidity pools, and points of interest. And then I see, is any of that relevant for today to make a decision? And then I make a little forecast on that time frame. So it's a very quick step-by-step approach, and let's do that together on this price action. So the first thing I'm going to look for is trend. So you might think, where do I begin my trend marking? Do I go all the way back 2 years ago, 3 years ago? Like, where does it begin? So let me remind you, the best way to do it is around where price is today. So we need to look a little bit lower and a little bit higher. So based on price being here, I just find a high point and I find a relevant low point. And then anything above that is not really important because that's going to be miles away. It might take months for price to get there. And anything below that, again, is years ago and it might not even get there anytime soon. So why does it matter for today's decision? It doesn't. So that's what we're going to be looking at. So when I zoom into this portion from the low to the high, I can start to see that overall, yes, it was a bearish trend. I don't need to understand who's really in control. So I don't need to look back 10 years of price action. We just start to see what's going on. That was a lower high that made a lower low, that made a lower high, that made this absolute low in the market of the range. So now we know that's the low. Then we started to have this internal price action because it's not breaking this last lower high and it's not breaking this last lower low. So it's internal price action. It's just within that range. Now when price breaks here and goes on to make this push, well, now it's a green dot because it's bullish. We've changed our direction. We've changed our trend. And I can start to mark that out and say that was a bullish push. And this last lower high that made this last lower low has now breached past here and we've actually had a bullish break of structure. So we've had a bullish trend coming in. Now, once we see that bullish trend coming in, we know that the buyers are in control. So I'm going to now see higher low, higher high, higher low, and then higher high, the top of my range. This is now being a bullish push up. So what do I do here? I mark the last higher low that went on to make this higher high. And what do I notice? From this range, price breaks the range and comes lower. So what do we have? We have a bearish shift. Sellers took control and made a lower low. Again, I'm giving you framework, but this is not what you need to do because price is all the way here. What does it matter about all of this? We need to build context. And that's why I'm not focusing on each little detail because it's not relevant for today's decision. What I can start to see is price now starts to make a lower high, fails to make a lower low. So when we found this new range from this high to this low, price has not broken past this low yet, and price has not broken past this high yet. So we are internal. So we bring our blue dots back in. That's not breaking anything. So these are all part of my bearish switch. And then eventually I get another blue dot that is an internal higher high. And what is it likely doing? It's likely come all the way to the extreme, this high in the market that made this low in the market. And because it was a lower low, we do it in red. We had a bearish push. We are inside of the range, the dotted lines. We have come all the way to the extreme with internal higher low, internal higher high. We have reached the extreme. And then what happens next? We see a bearish push because we break the range low. So what do we have now? We have now a new range where this is now our high of the range. And then our new low of the range is actually down here. We've actually got something useful now and we've got a bearish main push because this lower high in the market, how do we know we got a bearish push? Well, look at the red arrows. We had a high in the market that made a lower low and gave over here a bearish break of structure. After that bearish break of structure, we had internal bullish complex pullback, a retracement to the high, and then we had another bearish push to make a lower low. So now I know that the market is bearish. That's the first checkbox of finding a trend on the daily time frame. Next, once we have the trend, we find relevant points of interest. Not every point of interest, relevant points of interest. And then after that, we'll find the relevant liquidity pools. So now that I've found a main push based on this bearish red arrow, how do we know it's bearish? Because we created new lower lows. This was the previous low in the market. We broke it and we made a new low without breaking the last high. So we've got a bearish trend in place. Now I just need to look at the most recent push. I need to look at nothing before that. But the most recent push is lower high to lower low. So with lower high to lower low, knowing it is bearish, we look for our relevant supply zones. And that's going to be this extreme over here. We can keep it as the daily last candle, the last candle that got engulfed, or the last indecision, or an order block, or a supply zone, whatever you want to call it. We'll leave it like this for now. And what I'll do is I'll extend it down to that engulfing candle, that first bearish candle before the move from wick to the high of the zone. We have now found a daily supply zone. Now we also need to think, this one started the move and made the eventual low, but where was the real impact? Where was the real break of structure? Well, we look left and say, this was the last floor in price. Price couldn't break here. Who is responsible for breaking that floor in price? We look at price and we say, the only people responsible is these sellers right here, because these sellers are the ones that had the impact to break structure. So these guys started the move, gave a bit of a push, had a retracement. These guys made the damage. These ones broke the structure. So we found 2 points of interest on the daily, a extreme and a decisional, both as order blocks for supply zones. But again, price is here today. So is any of this relevant? Not really. I need to now look left and say, at the beginning of my sequence, where is that demand area? That demand area is all the way down here. And maybe if I take the decisional, the impact of the break of structure, then it's going to be these guys. And let's put it as a demand box. And let's scroll it out to the left and we say, well, this is nowhere near. Today's price action is not near my daily supply and not near my daily demand. So nothing is relevant on the daily time frame, which is why I just spend 1 or 2 minutes on it, because it's not relevant for today's price action or for the next few weeks maybe. Last thing we need to look at is liquidity. Is there any liquidity pools that are glaringly obvious from this time frame? Liquidity pool that I can see is, I don't really see a support level. I don't really see a resistance level. I don't really see a clear inducement zone. All I see is this trend line liquidity, where I'm getting 1 touch, 2 touch, and somewhere here could be the 3rd touch. That's somewhere price could be magnetized towards. Another one could be a ascending trend line. Again, not all of these are relevant right away. I'm just noticing zones. But again, none of this is going to be super relevant for this time frame, for this day. So that's my daily analysis done. Wasn't super useful, and the daily time frame usually isn't so useful unless you're sitting in the extreme, in which case you're going to refine it anyway to a lower time frame. So the daily time frame is just quick glance to look at my trend, points of interest, and liquidity. And once you've done that, then you ask yourself, is any of that relevant for me today? In this case, the answer is no. So we move down to the next package time frame. This is going to be your 4-hour/1 hour package. So with the 4-hour time frame, we do the same decisions. Trend, immediate trend, because it's more immediate than the daily, or more recent and relevant than the daily, more zoomed in. And then we look at more relevant and close POIs on the 4-hour/1 hour time frame. And then we look at the recent and relevant liquidity pools. So let's do that. So instead of looking at all of this information above and all of this information below, we know price is not going to reach there today and probably not even this week. So what do we look at? The most recent main push. That means, because we know we are bearish, we find our most recent lower high to lower low. We find our most recent bearish push. And what I can see is from this high to this low. That is our most recent main bearish push that stands out. Of course, there's more internal stuff, but let me tell you how we find it. We first need to find the last low in the market. This was the last low that led to a break of structure. And we just put a dotted line. And we ask ourselves, who led to the bearish break of structure of this? It was above here and is going to be that lower high. So that's where we start our zone. And then the absolute low is down here. We found the main push. Now, when I look a little bit closer, just a quick glance, I can see we had some highs over here. We built up some liquidity over here and then we induced it. And that inducement led to a low. So when I found an inducement supply zone that's led to a lower low, that's a perfect main push. And that's where I'm going to have my focus. So what do? We just do our dotted lines to tell us our range, our trading range. From this lower high to this lower low, this is our external structure on the 4-hour time frame. And anything inside of that is internal structure. So let's quickly dot that out. So we can see that this last higher low led to this higher high in the market internally. This grabbed the liquidity and led to this low. So from here, we could see we had a first internal break of structure. This internal higher low made that internal higher high, goes on to break and have that internal lower low. So we can do that as red. Just for clarity, we had the break of structure point right there. And this previous resistance point was broken high just for an inducement, not a bullish trend. And we see that inducement, the elastic band effect I speak about. We had a cause, which was we grabbed liquidity. We had the effect, which was a break of structure. We let go of the elastic band. What was the effect? Break of structure bearish. Then we follow that trend and we have lower high, lower low, lower high, lower low, lower high, and final lower low. When I look at that a little bit closer, now that we've marked out the trends, we can see build up and inducement, build up and inducement. Same here, wick inducement. So we can see that these were meaningful supply zones, meaningful trends, and a meaningful move. Then what happens when we make the final low in the market? Then we have this indecision point because it's not a bullish one that breaks higher and it doesn't make a lower low. It makes a higher low. So this is indecision. It's internal structure to this last bearish push. What does that lead to though? That leads to a bullish push out, where you have that internal higher high, internal higher low, internal higher high. Then price shoots lower. So that's a bit confusing. We need to understand what that means. And then price is sitting here today. So now we need to connect all of these dots together. So although our external structure is bearish, we actually found an internal structure of relevance, which is going to be our 4-hour bullish main push. From this higher low to this higher high, we do it in green because it's bullish. Why? Because we took out supply zones and internal bearish structure. So we can do a bullish break of structure here because we took out the last lower high that made the lower low. Apart from the external structure, in internal structure, we took out this last bearish push by having a bullish switch. So what does that mean? That means we can temporarily go bullish, continue this internal bullish higher high, higher low, higher high until we arrive to the extreme of our supply zone. Now stay with me. Let's connect the dots. So we know that from this main push of the external structure of lower high to lower low, we have this supply zone at the high over here. The supply zone was an inducement supply because we had this build up, we took the liquidity and it led to a lower low. So an inducement supply zone. Now price can just be climbing back up to make a retracement to here before we go on to continue this trend and go lower once again and then break external structure. And to put into more understandable terms, internal structure leads to external structure. So the internal trend is bullish based on these green arrows and then the external trend is bearish. So now we are making a story that long term we are bearish, mid-term we are bullish. But what is right now short term? We need to understand that by going down a lower time frame. Before we do, let's finalize our points of interest, and that's going to be by understanding that the zone of impact that led to the break of structure, this BOS, was done by these sellers. These sellers that had an inducement that led to the bearish break of structure, we already hit that zone. We already hit that decisional. So when price has already achieved one objective, the next objective is the extreme, and anywhere that's not a decisional or an extreme, like this zone here, it's not a decisional, it's not an extreme, because this one didn't break structure, it's just internal structure. So we might get a reaction here, but it doesn't mean price has to hold here. This one was our decisional, this one is our weak one, and this one is our extreme. Now, when we look at the complex pullback, the retracement, where is our supply and demand zones for that? Well, we have this demand area over here. Why is that a demand area? Because this area, these buyers led to this bullish break of structure. We broke the previous supply zone, the last internal lower low, now made an internal higher high. Demand area. And when I really zoom in now to get relevant price action information, I need to see what is going on here. Well, we have this bearish push because we took out this internal higher low that made this internal higher high. We had an internal break of structure. So what does that mean? What is the meaning of this internal bearish break of structure? Well, number one is it maybe leads to a supply zone here, but we have to think, is that relevant? Because if this is now a bullish switch from this higher high to make a new higher high to get to this extreme supply zone, then this one is just temporary. This internal bearish trend that we see where this lower high over here that made this lower low over here was simply to come to the demand area to go on to make a bullish switch where we have internal structure, complex pullback, and go on to follow this and eventually make a new bullish internal higher high. So if overall goal is bullish, we shouldn't pay too much attention to the supply zones because this is actually a higher high. This is not a supply zone. So now we've got relevant information to say not supplied, this is a higher high zone. This zone has already been taken care of. And now we look at liquidity, which is the last step. What we can clearly see is we've got this trend line liquidity building up that we could be looking to target. So now we know 4 hour is bullish. Where is the relevant demand area? Down here. Where is the relevant supply area? Maybe up here, but that's a weak supply because it's a high high. So our relevant supply area is all the way up here. What does that mean? We look to buy until we arrive to this supply zone. And where do we buy from? Buy zones, which is all the way down here. It's already met. So anywhere in here, we need to now look on a lower time frame. So therefore, this package time frame, the 4 hour / 1 hour, we got our trend, which was midterm bullish, long-term bearish. We found our points of interest, this demand area and this supply area, and liquidity pools. We found this ascending trend line, which we can target as we attack and become bullish. So now we have achieved our objective of the 4 hour time frame. Now we move to the next package, which is going to be our intraday time frame, home as I like to call it, which is going to be our M15, M30 time frame. So there's a lot of things going on the screen right now. So let's actually see what's relevant and what's important. First of all is to find our M15 / M30. I'm going to do M30 today, external structure. So this time frame's external structure is this low in the market that led to this bullish break of structure to make this high in the market. And that's going to be our M15 external high. And down here is going to be our M15 external low. Now we've got our M15 external high and low. That's our trading range. That's what we need to focus on. We know that this area is not a supply zone because it's a higher high, and higher high we don't sell at. So we know that we have the demand area down here. Then we need to look at internal structure a little bit better because we know now better that this was a retracement to come to demand. And now we are forming the new bullish narrative and bullish impulse to make a new higher high and attack the external high. So now we know where our external bullish push is, and we've come to the demand area. We need to find where is our last bearish push, our last bearish internal push. And where that's going to be is this last lower high that broke the structure and made this lower low to arrive to demand. Red for bearish, last internal structure, and that's going to be our last internal structure before we start attacking this external structure to go on to make higher highs and attack this M15 high. So let's also mark that out. So now we've got our M15 last push, internal high and internal low. This is our internal structure, and we know we've arrived to demand. So we know overall we are looking for that bullish replication of this arrow. We've already got a bullish internal trend. We're chasing this supply zone extreme of the external structure of the 4 hour. So we're building the story, and we know we're going to go from here to here and then long-term bearish. But we have to build the roadmaps to see how is it going to get there? How is it going to go from A to B? And how does it do that? We look at M15 and M30 points of interest, trend, and liquidity. So we found an M15 bearish push and arrived to demand, and we know overall we're going bullish. So we need to mark out relevant information. Relevant, like we had this buildup of liquidity here. That buildup of liquidity led to this inducement that led to this lower low. So price has already tapped into this zone a few times. We can also see we had another grab of liquidity here and tapping further into this supply zone. And what did that lead to? Did that lead to a break of structure? Did this inducement lead to bearish trend? No. Price simply came and respected a demand area. We just need to start build a picture here. So what do? We first start off with marking trend of internal structure. So we have internal low, internal lower high, and internal lower low. Then we have price accumulating in the zone, making an internal higher high. How do we know it's an internal higher high? Because this area fails to make a low, it makes a higher low. That goes on to make a higher high. That goes on to make a higher low. That goes on to make a higher high. This goes on to make a higher low. No structure break. This is a decisional. This is consolidation. And then this is the push out. So what that means is we found an internal bullish push. And price has done an inducement here into the supply zone to come back to the demand. And we can see that the sellers were in control based on this inducement as well, because we now connect the dots of the inducements. But let's actually read the story that's being painted, which is this inducement led to a break of structure and led to a low. This inducement over here, build up and inducement, led to this push down and low. This inducement over here led to a retracement. This inducement over here led to a retracement. So we can see that the sellers are still inducing, the sellers are still in control, but they're losing their impact. They're losing their control because they're not leading to lows like they were. They're hitting demand areas. Now we can start to see that this bullish push that we found and we arrived to demand has now been replicated, and maybe we are starting to attack this zone, and maybe we are on the way to have a bullish internal break of structure, or at least consume this supply zone even further. So now we have a decision to make. We have this demand level number 1 of the 4 hour. Then we hit an M15 internal demand, and we are floating around the M15 supply. We have the external structure points that we've mentioned, and then we need to find the most recent push, which is this arrow over here. And we can see related to that, the last push we can see is this area over here. Why is this one relevant? Because this internal higher low made this internal higher high, and more importantly, took out this inducement supply. So this inducement supply has now failed, and this inducement supply we're arriving to now and may fail. So we need to see what's going on in these zones, because we can start to see that buyers are taking control. How can I see that? Because now, like the sellers were inducing now, I can see that build up on the low. I can see this inducement out here and then a bullish push. And then I go again and I see, well, we had this huge trendline liquidity, and then price shot lower, induced, and that inducement led to a high. So now we can see that the sellers inducement zones are failing and the buyers inducement zones are succeeding. So buyers are in control right now. So now I need to piece all of this information together as I go to my next time frame, which is I have my external structure to target. And I know right now we are bullish and we need to attack this external high. So most likely price is going to make a new high from here to arrive to this supply zone. And if I can see that the buyers are in control at the moment because of these inducements, then I found relevant zones that I should be looking to buy from. And I follow the domino effect of buyers, where we had 4 hour demand, we had internal demand, mitigated internal demand with inducements of control. So I can see that this bullish arrow is happening, and it's happening right now. And we can start to attack this weak supply zone, because it's a weak supply zone, because this lower high made a lower low and arrived to demand. Job done. So now we have switched bullish and we have found bullish zones, bullish inducements, bullish demand areas. So we should be looking to buy today. So that's how you complete the story. We did the daily 4 hour M15. We had different ideas, different bullish pushes, bearish pushes, internal, external liquidity. We had all of that, but none of that is relevant. All it comes down to for today's analysis is these areas, this demand area and this weak supply area. And now we go to a lower time frame, prepared, ready on M1 to know exactly what we're looking for. And I'm going to show you that right now on the next time frame, which is our intra-session time frame, my favorite place to be. M1/M5 time frame. This is now when we can add my custom indicator and we can start to see the Asia range, the liquidity pools build up, and we start to see who's in control. What's the traps? What's the meaning? What's the liquidity? So I'm just going to fast forward through the day so we can see what's going on, and I'll show you how you should have read it based on the information we had. So I picked a random day and it's going to have a lot of meaning for you as we complete the day. This is my custom indicator where I have my Asia markings, my Asia midline high and low, my London key window, Frankfurt open, London open, New York open, New York key window, London close, high of previous day, low of previous day, all the relevant information you need. So as we whip through this day, what do we take away from it? What do we learn and what do we need to notice? So we know Asia high and low is liquidity pool. So the first place price targeted was Asia high liquidity. We got that first inducement on M1. What did that lead to? A break of structure bearish. So we know that the sellers were in control, and what were they targeting? This clear trend line liquidity and this clear Asia low liquidity. So what did price do? Price came down to this trend line, got buyers excited by giving them this internal bullish break of structure, higher high, higher low, higher high. Buyers are loading up, and what happens? Price induces, mitigates, sells, attacks that trend line liquidity. Who's in control? Asia high inducement, secondary inducements, and then where do we go? We killed the trend line liquidity, we get to Asia low. What do? We induce Asia low. We give a bullish switch and we get a mitigation with lower time frame demand area. So now we can start to see that the bullish trend that we mentioned, where the last soldier, the last inducement was here. The last bullish inducement was down here from previous day. This was a demand area, and price from this inducement led to this high. Now we can see the sellers took temporary control, took Asia low. This inducement now is reminding us the buyers are back in control and taking out these previous inducer supply levels. Buyers are back in control, and that's how you navigate it. When you get to an M1, you find on your time markings inducements to find who's in control, layering it with your M15. So now we know price came to this weak supply area, induced, gave us an internal structure confirmation, gave us a seller's trade. So what does that mean? You could have traded this inducement around here and sold all the way down to our liquidity target, which was Asia low. When you had your Asia low swept and you know you're overall bullish, you find the inducement bullish, you find the confirmation bullish, and you enter here because you saw the inducement of Asia low, a bullish switch, and you know you are bullish overall, and your target is to take out this supply zone and take out this internal high to start targeting your external high. Isn't that what we spoke about from the beginning? And that's a perfect trade setup right there. And that's exactly what you do. You take internal zones, external zones, inducements lead the show, market structure and zones help, trends help, and you connect the story together just like that. I hope this video is useful, quite advanced stuff. Watch it a few times to pick the key details. But the key details are take trend from each time frame, POIs from each time frame, inducements and liquidity from each time frame, and try and connect them together to build a story between external and internal pushes. And all of this only counts if you follow my key principle, which is a restricted trader is a profitable trader.